The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
All right, looking good, Billy Ray, feeling good, Lewis. Welcome to the show from Duke & Duke's offices of 100 South Broad Street, Philadelphia, Pennsylvania. We start the show out with the German DAX. You see that it had a big run-up this morning on that ABCD pattern, looking at that hourly chart, and now it's backed off quite a bit. But the one that you've got to pay attention to today, folks, is what's going on over in the UK. They must be taking lessons from us over here, or vice versa. I don't know which one is going to happen, but about an hour or so ago, maybe an hour and a half ago, Theresa May came out and they gave an ultimatum. In other words, that flow diagram that we looked at that they had planned on doing on the 12th, 13th, and 14th, they changed all the rules. Now, I don't know if you folks know this or not, but that referendum for Brexit is not binding. So the Parliament at any time can pick up a pen and scratch it out and say, hey, we're voting again. They haven't done that as of yet, but maybe they will. I'm not sure, but they've really done some rocking and rolling here this morning with it. So it's going to be very, very interesting. And in fact, that was one of the things that I wanted to chat about today, but there's something even bigger happening of something that we're involved in here at 24/7, and that is this situation in the live hogs. And Rich Anderson was kind enough to send this to us this morning so you can take a quick look at this. This is what's happening to the cash hog market over in China. And you see this explosive move we've had over these last few days. Well, those of you that have been following us here, we don't trade live hogs that often, but when we have a really nice setup, we try to, take a look at that. And that's, pretty much what we had back when the June hogs, were trading down there in early February. But take a look what's happened here just yesterday in the June hogs. We had a just about limit up move, and it looks like they should be called a little bit higher this morning. So, that's a pretty big move, and it's all related to what's going on over there, I guess. But all that was a pattern down there. You can see the 3 drive to a bottom pattern right at the 78% level, and the order was to buy it at 73.10 with a stop at 71.90, I believe, which we were just missed that by a hair, and now we've got well over 6 points in it, so it started to move very strongly, and that's what we're looking to see. By the way, yes, we are long hogs. By the way, that chart is not. That was the chart as of Friday, folks. The Tuesday chart. I'll post that just a little bit later because that's even here. I can do it right now. Since we're here among friends, we want to do that for everybody so that we can see. I want to show you another trade that we did that was really interesting because it was in the British pound, and got a lot of feedback from subscribers. Usually I get 1 or 2, but when I get 4 or 5, I really say, I better pay attention to this one and try to explain, what I was doing. But here's the hogs that you can see here that they're up even more. Let's just get this up here. We're up to 79.65. We're in that area where we want to start. We're going to be moving our stops up to 78. That locks in, 5 points. And what we'd like to do, you can see here the 61% retracement on hogs is a little bit higher at 80.60. We're going to take profits at that point, mainly because of the fact that it's been up now for 2 weeks, and we're right at a 61% retracement, locking in some, pretty good gains, but, we'll see whether that's going to be the case or not. So that's one of the ones that we want to look at today. But let's take a quick look here at the British pound, what it's done, folks. I want to bring this to your attention because this is there in the last Oh, 2 hours, I believe we've had about a 2.5% move in that market. That's a lot in foreign exchange, boys and girls. So it's something that we really need to watch here. Let's just bring this up and take a look at it. I'll just get this to your attention here. Hold on one second. This is the British pound. Now, we talked about this yesterday. The fact that we had, you can see the ABCD pattern that we had that started back on the 14th of January, up down into the 14th of February, up into the 4th of March. That was the 1.27 expansion, ABCD. The move between AB and the move between CD was symmetrical. In other words, AB was equal to CD in both price and time. And so the order was to sell at 133.50. It actually stayed there for 2 days. It doubled, it tested it twice over a 2-day period. Then it started to break. It came down. Yesterday was Monday was going to be the 13th day. So the order was to buy the British pound a Sunday night. And on Sunday night, it opened at 129.70, which was the absolute low of that move, right at a 61% retracement. And then, folks, it rallied 350 pips straight up. I mean, it went from 129.70 to 130.70. I mean, that's a huge move. And what we've seen happen so far this morning has been, it's just truly amazing. It's truly amazing to me, maybe not to anybody else, but let's get this up here to take a quick look at it. I want to show it to you here because this is a pretty big move. You'll be able to see it here very quickly here. There we go. Let's get this up. Now you can see you'll see the low there on the 10th. That's when the market opened at that 129.60. It got as low as 129.55. Then it rallied all the way up to the 78% level yesterday to 132.90. And then this morning, when this dude came out about an hour ago, it was about 2 hours ago. He came out when it was trading at 132.25 and immediately dropped 225 pips all the way down to the 130.10 level. We're now trading at 130.88. All this is related to what's going on this Brexit vote. That's what it's about. I mean, every time somebody opens their mouth over there, you're going to see moves of $200 or $300. And that was my reasoning, for covering the position down there to book a profit. Now, the $64 question, and it was a really good question, was why didn't I go long there? And my reasoning is because of all these votes that are happening on the 12th, 13th, and 14th. I frankly didn't want to get involved on the volatility part of it. And that was the reason. That was the only reason that I was looking at that. So we'll see what's that. So, hey, we got a caller this morning. This is good. Mr. Z, would it be? How you doing, my friend?
Good morning, sir. You must be without sleep the past 24 hours.
No, just the last few hours, because I got zinged from some of my friends over in the UK to tell me what had happened 2 hours ago, about an hour and 40 minutes ago, to let me know something big was happening. Hey, we've got to pay a few bills. Stay with us, buddy, okay?
Yes, sir.
We'll be right. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we're talking with Mr. Z from Philadelphia. John, you were asking about the euro?
I am asking about the euro, Larry, yes.
Okay, I've posted the daily chart that we look at that each day, of course. And if you notice that last Wednesday, we made that 3 drive to a bottom pattern when we took out that long-term key support at that 112 and change. I think it was 112.10. We got down to 111.85 for just a few hours, and then of course it's been rallying ever since, and I think that's a really key level. How long it's going to last, I don't know. Here's what I'll do, John. See, I'm looking at now a 3-day rally in the euro in a pretty strong downtrend, as you can see. So that what I will do is I will go down to a 4-hour chart, and I do believe I just did one here. Let's just double check. I think I did. Oh, dear. Well, I know it's here somewhere, my friend. Just bear with me. I know I'm going to have to dig it out like I always do. Shut the front door and raise the rent. Well, you know what I'm going to do? I'm going to redo it because I know I did it and I sent it and I can't find it. That's frustrating as heck. Well, here, it'll only take me a second to bring it up here, and believe me, I know I can do it very, very quickly here, but part of the fact is that we're having some rain here out in the old Pueblo, and we want to, there we go, just here it comes. It'll be here in just a second, and we'll move to the, there we go. We're going to get to that hourly chart. I think you'll be able to see it. Here we come. We'll bring this up here and take a quick look at it. Okay, here's the hourly. John, you see that high we had there at 114.20? Then we dropped 250 points right down to the 1.27. You can see it there in the bottom line. That was 111.80. That was the number. The low was 111.77. Then we had the big rally, and all we're doing right now is we're making a 78% level retracement from where the break came. That's when that news came out about Brexit. And that's when the big thing came down, and now we're right at that 78% level up here at that 112.80, 112.90 level. But if we get above 113.30, John, we've got a major bottom formed in the euro, and that's the opposite of what the dollar is doing. If you'll remember from the newsletter, the fact is, I sent a special video newsletter out this week in the currencies because it was, so very, very important, basing it on the fact that this potential double top, and it's even more apparent this morning, could be happening here in this dollar index at that 97.72, which the reverse of that is the euro. So that means if the dollar is going to go down, the euro's going up, and that's what's happening now. We got the dollar index moving down a little bit. So that's what I see. Now, if we get above 98, then this is all wrong, and the euro's heading down to that maybe 110 level. But right now, it's got legs.
Larry, thank you on that. Can I do a follow-up question, please?
Absolutely. Go right ahead.
Okay, here it is.
Plenty of time.
First, background. Thank you for pointing out on that daily charts going back just, a couple of months, that you see a potential three-drive to a bottom pattern with a low last Thursday at 111.75 on the cash pair. Furthermore, if one looks at the weekly chart and goes back into July and June, the weekly chart itself shows a potential three-drive to a bottom pattern. So we've got a small three-drive potential, we've got a larger three-drive potential, and furthermore, 111.75 is exactly, and I stress exactly, a Fibonacci 618 support level of that 2017-2018 rally. So those are the background facts. I have bought the euro yesterday. I didn't buy it last Thursday. There was a little dip yesterday. I bought it at 112.25. Why am I wrong, in your opinion, please, in buying it there and just holding it with a stop under the lows of last week, thinking it's going over 116 up to 120, maybe higher?
Well, John, I have some great news for you, my friend. You asked me a question, is why are you wrong? And you're asking a person who's wrong a lot. So I have a lot of experience about being wrong. At this particular time, I don't think you're wrong. It looks bullish to me. I mean, it really does. Now, it might change. And if we get below that 111.75, you're certainly wrong. But this thing could have really big legs. I'm very, very friendly to the euro right now. I mean, it's up against some little bit of resistance right now, and this might just be a little three-day rally and return down. But frankly, right now, it looks okay to me. And you're right about those fib numbers. That 111 and change was a weekly 61% retracement. It's a 1.27 expansion. We took out all the stops from the last year, and it didn't go down. I mean, those of you that watch the market, it didn't spend any time below 112. There was a lot of buying coming in, so I think you're right on. Hey, John, you've called some major stuff here in the last few months. You had that bottom in gold and silver, and so many of them. I just can't go through all of them, but I think you're absolutely right. Your analysis is correct, and that's without any fundamental stuff too. I mean, you're just looking at technicals, and that's what we're really trying to do here.
Yeah, in fact, and I'll share this with you, and you know this because we've dealt with each other so long, whereas you have developed expertise and experience and tools that you find just perpetual money makers when trading foreign exchange.
They're not perpetual, but they raise their head once in a while.
I am the exact opposite. I do not. I formed an entirely different way of trading. Namely, I only want to get involved when I can see and understand a larger move in a market unfolding. Attempt to trade it as if that move is about to occur. When I'm wrong, then just dispense with trading of whatever instrument or market that is. But when I'm right, then to stick with it, push it, and quote-unquote milk the hell out of it if possible. And what I will share with you, Larry, all those factors that I mentioned and that you just spoke of on the euro, fundamentally speaking, I see a turn right here fundamentally in the euro versus the dollar. And just to make it real simple, last Thursday when ECB Chief Draghi gave a press conference and came out with essentially an outlook for the Eurozone and the currency being more dovish.
Oh, we got to take a break. Stay with us, John. Can you do that? Oh, we got Stan Harley coming up, John. We'll get back with you tomorrow, okay?
Very good.
All right, buddy. Thanks for calling in. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have Stan Harley on the line. Stan, are you there?
Good morning, Larry, from Phoenix, Arizona. What do you think about this rain we've been having?
Well, welcome to the springtime, buddy. That's why we get these beautiful allergies coming in pretty soon when the desert starts in bloom. You haven't seen anything until those. You've been here a year, so you've seen the Palo Verde trees bloom with those beautiful yellow flowers that brings all the dermatologists from all over the world here. But
it's absolutely gorgeous when the rains come here. Oh yeah.
Hey, Stan,
Love it.
could you hold on for just a little second? The old cowboy's got to eat a little crow here to the folks, and I wanted to go over a market that we're watching really closely, and it's moving quickly, and I think I need to cover this. Only take about 1 minute,
Absolutely.
so bear with me. Folks, yesterday I talked about that head and shoulders potential bottom in Treasury bonds. It just really was set up just perfectly. And what we're looking at today, and I just want to bring this up to your attention so you can take a quick look at it. You'll see the low we made there on March 3rd. That was the real bottom, and then of course we had this. That was the right shoulder actually. Then we had the big rally up. Now what we've done here in the last 2 days is we made a 38% pullback exactly last night. And you can see we've jumped, well over $600 right away. As long as we don't get below that 145.05, that looks very bullish, folks. So that head and shoulders pattern might be moving. So that's really what I wanted to tell you about. We're actually not involved in that trade, Stan, but I wanted to let the folks know that I've been bearish bonds since Hector was a pup, and with this head and shoulders potential, I have to mitigate my bearishness, and I was just catching them up with it. How are you doing, my friend?
I'm just doing awesome, Larry.
Good.
Doing awesome.
All right. What do you think of this volatility? Dow Jones down 300 points on the opening and rallies up to be up 200 points. Just a small, 450-point rally?
Larry, just in keeping with my theme from our last conversation, I think the bull market express rocks on. I think the Christmas bottom we saw was part and parcel of what I call a 49-month cycle bottom. That cycle expands and contracts, but it was part of that series. And I think from this point forward, the path of least resistance is northbound. That Christmas bottom occurred exactly 144 Fibonacci weeks from the February 2016 bottom, and 377 Fibonacci weeks from the October 2011 bottom. So I have reason to be bullish. The advanced decline line just went to an all-time high recently, and we have clear evidence of right translation in the dominant trading cycle on the daily charts. Right translation is evidence of bull market.
Yes.
I'd also point out that one other thing, and I showed this in the newsletter, one indicator that I track that's helps a lot in identifying major bottoms is what I call my unchanged issues index. And I kind of take a peek beneath the hood, so to speak. I look at advances, declines, new highs, new lows. I also look at unchanged issues and plot that. And going back many, many years, I find that when unchanged issues get down below 60, that is a very meaningful bottom. The stock market has an interesting characteristic, as you and I and our listeners know. We tend to see more volatility at market bottoms and a lessening in volatility at market highs, which is just the opposite of what the gold market does, for example. But as the market goes down, we have more volatility, so unchanged issues get smaller and smaller. And going back the last 10, 12 years, we've seen 4 times that that index has gotten below 60. At the 2009 bottom, the 2011 bottom, the 2016 bottom, and again at the 2018 bottom. We saw unchanged issues get down below 60, and that has been indicative every single time of a major bottom. So long story short, Larry, I have every reason to be bullish. I think we're going higher. Having said that, though, in the very near term, I think we probably hit a glass ceiling. In looking at both the rallies off the 2009 bottom and the 2016 bottom, they have something in common. Not only did they have right translation, but they saw their initial high 44 to 47 trading days from the bottom. The 2009 bottom saw its first high at the 44th trading day, and the 2016 bottom saw its first initial high at the 47th trading day. Guess what? You had 44 to 47 trading days to December 26, and you get early March. In fact, the high on March 4th occurred at day number 45 off the bottom. So history kind of repeats. So yeah, I think we hit a high there, and I think we're gonna stall out, and we're gonna kind of digest the gains that we've made thus far. So I look for basically a sideways structure for the next month with a perhaps a modestly downward bias, but essentially a choppy environment, sideways in structure from now until mid-April. And then I think we'll get more oversold at that point, even though we will not have gone down a heck of a lot. And the seeds will be in place for the next shot higher. And I think from that point in mid-April, I don't know what the fundamental catalyst will be. Perhaps a trade deal with China, I don't know. But from my analysis of the Fibonacci relationships, counting from past highs and lows and ratios and so forth, mid-April is shaping up as what I'm calling a springboard bottom, a back up the truck moment.
Well, Stan, you just mentioned your counts on Fibonacci points, and that's one of the questions that we have from one of our listeners up in the state of Oregon. And he's asking, when is your next short-term count in your Fibonacci points that you look at? He's been watching, and he says that he's very impressed with those, and I certainly am too. Do you have any key dates coming up in the next 5 or 6 trading days that look interesting?
Next 5 or 6 days, not really. As I said, I think we hit a high on March the 4th. The operable function there was 89, Fib 89 divided by 2, which is 44.5. I see that all the time. It frequently coincides with market highs. And March the 5th was 45 trading days off the bottom.
Wow.
The next turning point of significance, and I think we're going to go through a kind of an ABC structure here, with the A point yet to come on the downside, then a rally back up, forming the B high, and the C wave low occurring right around mid-April. The numerical counts I don't have in front of me as we speak, but the analysis and the ratios and everything I've done here on my computer suggests mid-April will be, as I said, a back up the truck moment here, where you want to get heavily long. We shall see. I may change my mind, but right now that's how it looks.
Well, we always have that prerogative.
I tell you, Larry, the very best tool a market technician can have, the absolute very best tool, an eraser.
Yes, and a flexible opinion. Hey, listen, thanks for joining us, buddy. If the folks want to reach you, they just go to the Stan Harley Stock Market Letter, and they can reach you through there. Oh, do you have an opinion on gold, Stan? Someone's asking us that.
I think we're chopping around making a 24-month cycle bottom right now, but I think we're going to be higher in the mid-year.
Thank you, my friend. Listen, take it easy and stay out of the rain today.
Absolutely, Larry. Thank you for being your guest.
You betcha. Stan Harley, the Stan Harley Stock Market Letter, folks. We'll be right back to talk about gold.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom Tom O'Brien publishes his gold report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, I've posted the chart of the gold. What we were hoping to see and what we're seeing is a little different. We wanted to see the market get down to that 1288 level. We only got down to 1291. We rallied up to $1,300 an ounce today. Still, and we're down trading around 1296 right now. But the real key here, folks, there's something else going on in these markets this morning, which is unusual, and that is the fact that if we take a look at silver, and we're going to do that right now, you'll see that the silver has actually taken out the highs of the last few days. That would be equivalent, way above that $1,300 and some dollar, 1308 level in the gold. So silver is really starting to move pretty good. It held that 1.618 expansion level. The 50% retracement of the low in November held pretty good. So, there's nothing wrong with silver right now. It's actually doing much better. Whether it's going to be a big leg up or not, Mike, I'm not sure, but it's got that possibility. It started in the right direction. If we look at platinum, which has been extremely bullish, you'll notice here that we had a 61% pullback in platinum down around the 815 level. The low was 812. And, now we're trading $22 higher up there, 836 level. And there's another one that's moving really quickly. So both both silver and gold, let's try it again, Larry. Silver and platinum are doing pretty good. We'll see. Anyway, that was just a regular little bit of a pullback, and whether that's going to mean anything or not, I don't know. But it certainly got all the legs necessary to see if it's going to move in that direction. But it started the right way, that's for absolutely sure. Now, the stock market, we talked with Stan Harley, of course. We had that move. I posted that chart for the E-mini S&P, but the one that we really need to watch here is the this NASDAQ, because this is the whole reason for this bearishness. This is the NASDAQ composite on the daily basis. And when you look at this on the longer term weekly, you can see that head and shoulders pattern is still in effect. We need to get that market way above 7,700. And then if we get that, that means that head and shoulders pattern will have been broken, and we'll have to reverse our position and see where we stand as far as the market, selling off a little bit. Longer term, with that big move we had off December 26th, I have to agree with Stan 100%. That was a major, major bottom, folks. We hit that on every single index, spot on everywhere, and it was right over the 26th of December. And bada bing, bada boom, you can see with tremendous move that we've had here. And with the as Stan was mentioning, the advanced decline index is broken out to the upside. It's it does look like it has a lot of bullishness. Now, we did make a nice retracement. I posted that 382 retracement in the S&P in the newsletter, of course, on Sunday. And this was a very, very important bottom. And, of course, the market just started higher and just continued to go up. We got up to now we're going to be switching over to the June contract pretty soon. So we got up to that 2790 level yesterday. And in order for this to get really bullish, it's got to bust through that 2820 level. The high was 2819 in the March. But we'll be switching over. I think we switch over a week from, it's Thursday. It's the third Thursday of the month. So that'll be, wow, that's going to be on the full moon. That will be on the 19th, and excuse me, that'll be the 20th of March. Will be nope, that's a Wednesday. The 21st is the last trading day for that March S&P. So anyway, we'll keep an eye on it. But it does look like it has some a little bit of resistance up in this level. But then it will be. It is this week. It's the third Thursday of the month, Jose, as I recall. And I'm doing that from memory. I don't know if it's changed or not, but it's been the third. It's been the third Thursday for a long time, and I'm always out of that stuff long before. I don't get involved with it. As soon as the open interest starts to drop in the nearby, I switch over, to the other contract and make the necessary adjustments, which are small, but that's neither here nor there. So we'll watch that as we go through here, looking at these things. Another one that we're involved in is the. Take a quick look here. Is this Canadian dollar? We've broken below the 34 level again. And, this is another one related to some of these. Oh, shucks. Hold on one second, folks. We got a little bit of a technical difficulty here. There we go. And we're looking for that possibly to get down to that 132.50 level. But we're having some really good action in the British pound and also the euro. The euro's had a nice bit of action, but we did reach some significant support today after this 3-day rally at that 112.90 level. Right now we're trading at 112.81. We're moving 40 pips up and down just as fast as you can possibly get. So you need to, watch this one very, very closely. So the currencies are always the place to be, in my opinion, because you have some great patterns and you got such a good array of things to trade of the big six. You've got the pound, the yen, the euro, the Swiss, the Australian, the Canadian, and the yen. I mean, all of those are. I don't do the U.S. dollar because that's a lot less liquid, but it's tradable if you're trading small size. Not a problem. Now, one of the things that someone asked me that I wanted to cover today is what's the advantage of trading at the Chicago Mercantile Exchange with their contracts as opposed to trading with a Forex bank like Deutsche Bank, Saxo Bank, Commerce Bank, any of those. And the answer is that is the commission. It is much cheaper to trade at the Chicago Mercantile Exchange because the usual contract size there is $100,000. The commission usually is under $5. In other words, you can trade buy and sell, $250 each side, and that's pretty good. But if you're trading with one of the Forex banks, they usually charge you 2 pips if you're a smaller trader. Larger trader, usually 1 pip, sometimes half a pip. But even if you're a small trader, the difference between, 2 pips in the euro, which is $20 versus $5, you're talking about $15 a trade. If you did 20 trades a month, you're looking at $300 just in savings and commission. And if you look at the Merc and I do watch that, the bid and offers on those are right there. I mean, you don't have to get slipped by 2 or 3 pips because you can put your order in and they trade pretty actively. It's a very, very small percentage of what's going on in the actual Forex market, but it is certainly tradable. And one other thing that's very important, it's a valid contract. With the Forex banks, it's not that way. So, those are just contracts between you and that Forex bank that they're doing the transactions for you. And believe me, they protect themselves first, just like the CME does. So that's another factor that we need to pay, really close attention to. So those are the ones that we're paying attention to this morning. My goodness, the show's coming to an end already. Can you believe that? And we'll see what's going to happen in the next few minutes here when we get back from this break that we're going to have pretty soon. We want to review some of the markets this morning, where they are and where they could be going. So let's pay close attention to it. and we'll see if these patterns are still going to keep moving like we think they're going to be moving. But it's still a little bit early. We got that euro at 112.81, folks. We get it above 112.90. This thing could have game. You know, that low, we're over 100 pips higher in just a few days. That's a big move in the euro. So let's pay attention. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I want to thank Steve Rhodes for letting me know that it's the third Friday of the month, not the third Thursday of the month. They changed that since the day of the covered wagon, so it is the March the 21st. No, 22nd, I guess. Let's say it's the 15th. It's this Friday. So that's very, very important to know. And the next thing I want to bring you about is how to catch a falling safe, and you got to be really careful here. But this is the British pound. Looking over at the last month, you'll notice that we had that 78% rally between Sunday and Monday, a big 78% pullback last night, and now we're trading around 130, 170. What I'm assuming here, there's a possibility with all this news that's going out here, and if this pattern works this way, we might have an ABCD structure coming in around 129. So what I'm going to do is I'm going to buy it at 129,
put a stop at 128, which you're going to have to risk about $600, because if you're right, it's going to hit 129 and rocket right back up again. If you're wrong, you're going to be out $600. But the pound has been really good to us. To the tune of about 4.5 handles this week. So we will watch it very, very closely. But you can see that major bottom we made down there, that 3 drive to a bottom pattern there on the left side of the chart, 127.60. That's what Mr. Z and I were talking about. That was a 78% retracement on the weekly. And so we talked about Mr. Z about that yesterday. Today was the euro, the importance of that 111.75, the 618 on the weekly, and also the 3 drive pattern on the daily. So we're watching that one with a great deal of anticipation also. So the one thing that we want to remember, folks, is to live every day in an attitude of gratitude, and may God bless, and do something for someone that has a whole lot less than you today, folks. Make that your goal. You'll feel a lot better, and so will they. So we'll see you on the flip side tomorrow, and may God bless.